Beginning at the top, where the fewest people reside, is the perfect credit, or prime category, from 850 to 700. Only about 10% of borrowers fall into that range, which offers the best interest rates. When the press speaks of the prime lending rate, they are describing the interest rate on lending under the most ideal of risk conditions. In order for an individual to occupy this niche, he or she have paid and continue to pay for all debts consistently on time and in full. Within the financial histories of these people, there must have been no delinquencies and very few investigations of their credit histories, referred to in the lending industry as credit pulling. Borrowers in this category will likely never have to worry about any sort of financing, as they pose the smallest risk in lending money. Good to average credit ranges in scores from 699 to 620. Though the bottom score can fluctuate based on current economic conditions, locales, and population changes within that range. Some lenders view being below 601 as having poor credit, while others may ratchet that number as high as 640. Competition in the lending market can alter the perceptions of what the bottom scores signify, as some finance companies may assume greater risk than others in trying to sell car loans. Where bad credit is concerned, the numbers cannot give the reason behind that rating. When it comes to financing for a car loan, for instance, a credit investigation will be conducted by the lender, which means it will request a copy of the borrower's credit report, as well as the current credit score. Industry-wide, this is referred to as pulling a client's credit, and has the curious effect of lowering the borrower's credit score. The effect is not significant and will play a much smaller part in determining an individual's credit score than something like missing payments or defaulting on a loan. The numbers falling below average, however, can be broken up by lenders into the two classes, subprime and deep subprime. Subprime credit refers to credit scores below 600, though there are variances in that value, and carries with it certain difficulties in getting financing. Commonly known as poor or bad credit, having a credit rating at this level indicates problems in meeting debt obligations, carrying too much debt, or having too small a presence in the credit world. While the borrower with bad credit may have to pay higher interest rates than someone with average to perfect credit, the possibility of being approved for car loans is fairly good. A credit score falling below 600 may indicate a higher risk to a lender. There is still a high probability that financing will be approved by a given lender, since there will likely be extenuating circumstances in their credit history that indicate to the lender that the risk is worth taking. Deep subprime credit can be thought of as having very bad credit or no credit. There is little chance of getting car loan financing unless a lender is especially equipped to deal with the level of risk such a credit rating carries. People who fall into this category are likely to have gone bankrupt at some point and never recovered financially. Others may be deadbeats who just don't pay their debts. Sadly, there are people who look at credit as nothing more than a scam by which they can get a hold of some money and disappear when the bill comes due. Still others are people who never held a credit account. These may be hardworking people who meet all their responsibilities head on. They simply never bought into the system that allows people to purchase something they normally couldn't afford. Zero credit financing does exist, but this doesn't mean that financing institutions offering programs to people with no credit are about to throw money at anyone asking for a car loan. The probability of someone with no credit getting a car loan is small, and usually requires the intervention of a government or nonprofit agency to assist in the auto loan process. Federal auto loan. Good credit, bad credit, no credit, all good.